Yeah, good morning, good afternoon, good evening, depending on the time you're watching this video. My name is Emma Henry, and it's a privilege to welcome you to today's class. I am the CEO of Juve Trades. Please do not forget to subscribe to this video, and the content has been of great help and assistance to you in your trading. You can email me at juvetrades@gmail.com for coaching and mentorship. Alright, we will go straight to the reason for which we are holding this class today. And today's class we will continue from where we stopped on trend lines. On our last video, I talked about how to understand boom and crash using trend lines, and I said that trend lines are from two words, trend and lines, and that they are used for tracing the trend and also for forecasting purposes. Today we will talk more in-depthly about trend lines, though there will still be another video on trend lines, so please be on the watch out. So today what will we talk about trend lines? Permit me to invite the phone. We will be looking at the two major types of trend lines we have in trading, and these are called inner trend lines and outer trend lines. Inner trend lines and outer trend lines. Like trend lines are basically diagonal price action tools that are used for tracing the trend, and they are used for not just tracing the trend but also for forecasting purposes. And how do you place your trend lines? Remember talking about our swing highs and swing lows. So today we'll look at the two major types of trend lines, which is your outer trend line and your inner trend lines. Now, what are outer trend lines? Outer trend lines are usually called major trend lines, and they are trend lines that are plotted on higher time frames. If you look at this video precisely, this is our W1, so that is a higher time frame. So any trend line we are going to plot on this time frame will be a major trend line. This is because outer trend lines or major trend lines serve as potential reversal points or potential breakout points for the market, and this is where smart money looks at. Okay, we are looking at 1000 today, so I'm going to plot some major trend lines, so follow through. As we do so, you know how to pick your trend lines and how to plot them. Okay, permit me. Okay, this is 2 pixels, so we can make do with this. So we come to our swing low, like already. Swing low, swing low, swing low, and then we'll pick our swing high, swing high, swing high, and then what? Our swing high. Those are the 4 major points for our major trend line, which are of course the obvious points. Or like you will know, Boom 1000 is less than 3 years old, so that is why we don't have so many candlesticks to fall back on. However, our week 1 becomes our dominant, our major higher time frame that we can fall back on. For some people, you can fall back on your monthly, but it will not be out of place to rely on the W1. Okay, we've gotten our swing low trend line, which is this one here. So now let's go over to get our swing high trend line. So we go and pick our trend line again, and then this might cause a little issue if you're a beginner, but just be a bit patient with yourself. So we'll pick it and then place it there at that tip, and then what do? We draw it down. All right, so I think that should just a little bit more. All right, so if you look at that, we've been able to pick our swing highs and swing lows using these trend lines. So what does this mean? It means that the price came down from our first point of trend line. It came down, moved back up, came down, and then went up and touched the second swing. And then of course we sell on a resistance and buy on a support. It came down and didn't get to the support zone here, then went up and gave us a range, and then you can see it picked up to the third swing high, and then what happened? The market fell like a truck. And when it came to the point here where many people thought there would be what? A buy up. Many people thought there would be a buy up at this point. The market did what? It broke it down and then continued. So this trend line confirmed what? A downtrend. So if we are going to go forward to check out how it looks like, let's see what happens in our daily time frames. You can see our swingle here, so real. So this is the point that the trend line was compromised. Point in which the trend line was compromised. All right, and then we had what? A downtrend. And then the market is just beginning to give us some impulsive move a little bit here, but I'm expecting that something will happen and then the market will fall back. All right, this is our major trend line. This is our major trend line. So what can we do with major trend lines? Major trend line serves as what? A position where smart money looks at. That's the first thing. And also serves as a potential reversal or continuation point. What do I mean by potential? When the market came down to this point, it went back up. It came back to the trend line, it went back up. You can see that these are potential reversal points. And then it came back and what? Ranged for quite some time before coming back to where? The third point. And then what happened? It gave us another bullish move. So trend lines are helpful in forecasting and also predicting the market. However, when the market got to this particular point, you can see that what? The trend line was what? Compromised, and it came down. So at this point, what are we supposed to do? We will begin to plot what we call inner trend lines, which is the second type of trend lines. Now, inner trend lines are usually minor trend lines. I call them minor trend lines because, sorry for that, because they are plotted on time frames that are lower than where the major trend lines are. Please, I repeat that point. They are plotted on time frames that is or are lower than where the major trend lines are. So if we have a major trend line on W1, then any trend line that is within that major trend line, be it on D1, on H4, on H1, is what I call a minor trend line. Are we together? All right. So a minor trend line are plotted on time frames that are lower than the major trend lines. So why do we plot minor trend lines? Because they also serve in forecasting purposes and for tracing the trend for possible reversal and possible continuation of prices. Okay, so let's continue with our analysis. We can see at this point this is our D1. There are some peculiar features the market has given us. It has given us a swing high, a swing high, a swing high, and then we can make something out of that. So what do? We pick another trend line, all right, and then draw it downwards. We draw the trend line downwards. Somebody might say, what is this one? This trend line is not within the major trend line, so we call it is not within a major trend line. So what do? We call it a minor trend line. All right, so let's look at that price. All right, this is so clear and beautiful. Now if you see what I am seeing, the first thing I can tell you is that we had a confluence at this point, and the confluence always signals a confirmed change of trend. All right, then the second thing we saw was that this market broke past that major trend line, and then what is giving us a correction to where? A possible trend line here. How do I know? This is your point 1, this is your point 2, and then this is our what? This is our point 1, point 2, and this is our 1, point 3. So I want to believe that once this market gets to this trend line, what will happen? Another fall will take place. So for people that are B1000 traders and lovers, watch out for what an impulsive downtrend. However, if the market by any chance breaks through this trend line, if the market by any chance breaks through the trend line, what I'm expecting the market to do is to bounce back at this support level. So let's just be on a watch out. All right, and then you can also use your Fibonacci to trace the correction level, which I will do immediately to assist some people. All right, so I place it there and then I take it to my high. Okay, we can see that the correction is not even up to 23.6. It's not even up there. So let's watch out and see what the price will do. Okay, are we together? So let's continue in breaking down the analysis to our H4. Okay, let's break down the analysis to our H4. All right, now if you look at this point also in D1, this is, remember what I told you, confluence points. There was another confluence here when I drew these trend lines to pick this, the lows, the swing lows. It was at this confluence point that what the reversal began. It was at that confluence that the reversal began. All right. So trend lines are powerful trading icons that if you know how to use them, you would definitely be happy with yourself. Okay, so let's continue. Can't we pick a trend line that will trace the price downwards this way? Well, sure we can. We have an insignificant low somewhere here. There's an insignificant low somewhere here, so we will make use of that and then pick our trend line and drop it there and then write it down. All right, write it down. So we can see that our focus, all right, so we can see how this has played out to be what, 1, 2, and then what, this point. Now if you are an indicator trader, I'm sure by now your indicator would have been showing you what, a divergence. Now let's run down to H4 to see how the market is. Can we pick some trend lines and play with the market? Oh, sure we can. So how will we do that? We focus on our what, our swing highs and lows. You can see many of them here, and then what, here. So that will be our focus, and then we pick it down and then run it from that point. Okay, now we've been able to observe some things, and then we continue. Okay, all right, and that becomes a beautiful point. So if you look very well, let's go to a lower time frame like H1. If you look very well at this market, you get to realize that, okay, let's go back to H4. So this looks a little bit tiny, but it's manageable, much more better than. If you look at this point here, that is our resistance. Okay, so the market came back at that resistance. Now the resistance has extended quite long. If you trace it back to history, it's a long-term resistance, and you can see that the market has hit so many times. You can see this is a support, turn, resistance 1, resistance 2, and then came back 3, 4, 5, and then 6. So there is a possibility of the market breaking through this point. So how can I trade this market if peradventure the market breaks down out of this point? Is to wait for the market to give us a breakout first. A breakout, like, you know what I mean. The market is coming down, and peradventure this was your stuff. Okay, let's look at it this way. This is your uptrend, downtrend, uptrend. Let's wait for this breakdown here. Let me change the color to something something like that. Okay, so once the market breaks out of that point, don't trade this because it could be false. Wait for a pullback, and peradventure the market should come down. This becomes your entry. This point marked blue becomes blue, right? This point marked blue becomes your what? Entry. This becomes your entry for a downtrend. That's because the market will definitely break through here and then run down. All right, so that is how you do your trend line analysis. Okay, let's look at what H1 is telling us. All right, looking at this point, we can see that what, when the market came here, what happened? We saw a bullish move, and we have just 15 minutes to the end of 1 hour, and what we are observing is what? A hammer candle. A hammer. So of course, when you see a hammer on the support, you know that that is what? A reversal candlestick pattern. However, we cannot conclude until 1 hour is complete. So we'll watch what the market will do in the next 15 minutes, and after that we'll watch the next candle that will show up, the next 1 hour candle. And if it is bullish, then we know that we are riding long. But if it's bearish, then we know that we are coming. We should wait a little bit and watch what the price is gonna do. So with that, we can see that this is how we analyze the market and then trade it. Like I always say, that the most dangerous thing for you to do in boom and crash is for you to scalp. The best thing you can do is for you to either day trade or swing trade. Now, breaking the analysis down to M30, see what happened here at this point. Let me zoom it for you to see. The market gave us what? A spinning top. Look at it here, this candle, that's what I mean. Yeah, that candle. It gave us a spinning top. What that simply means is that the bulls has stepped into the market. Let me go to M15. Look at it. The bulls have stepped into the market, and right now we are just going to observe until the 1 hour is completed. I wouldn't advise anybody to trade this market right now, even when the market is on a support and it's trying to show us what? That the bulls are beginning to dominate the market. So at this point, keep your fingers crossed and watch. Now, for the purpose of the analysis, I am too sure that we can see how we can use trend lines to make analysis from a higher time frame to a lower time frame. A higher time frame trend line is what we call what? Our major trend lines, and then our lower time frame trend lines is what we call what? Inner trend lines. And inner trend lines could also be plotted on time frames lower than where the major trend lines are. So with that, I want you to do an exercise and then plot your trend lines, do the analysis from a higher time frame to a lower time frame. Pick any market of your choice, and then let's see what you can make out of it. Until then, or until our next video comes up, stay blessed, and please do not forget to subscribe to the channel. And you can as well send me an email at joviatrades@gmail.com if you need coaching and mentorship or private tutorship. Thank you so much.